AP, Bangkok, in light post-Christmas holiday trade on Monday in Asia, where many markets were closed, shares increased. The Kospi in Seoul increased by 0.2% to 2,317.48, while the Nikkei 225 index in Tokyo increased by 0.5% to 26,367.40. The SET in Bangkok increased 0.3%, while the Shanghai Composite index increased 0.7% to 3,067.54. Traders were looking forward to the Central Bank of Japan's governor's speech on Monday for cues as to whether the Bank of Japan could further modify its long-standing ultra-lax monetary policy to address inflationary pressures. The Japanese yen has fallen significantly in value relative to the US dollar and other major currencies as a result of the increasing interest rate differential between Japan and other nations, which has also increased the cost of many imported goods and commodities. But because to the possibility of a recession, the BOJ has maintained its benchmark lending rate at minus 0.1%. The S&P 500 recovered from a 0.7% loss on Friday to closing 0.6% higher at 3,844.82. 2022's trading year is only 1 week old, and the benchmark index is down 19.3% for the year. The tech-heavy Nasdaq grew by 0.2% to 10,497.86. While the Dow Jones Industrial Average increased by 0.5% to 33,203.93. Small company stocks increased as well to reach 1,760.93. The Russell 2000 index increased by 0.4%. Markets are in a difficult position as relatively strong consumer spending and a robust job market lessen the likelihood of a recession but also increase the danger of higher interest rates from the Federal Reserve as it intensifies its fight against inflation. The government announced on Friday that a crucial inflation indicator is still far higher than anyone would like to see, despite the fact that it is slowing down. The Personal Consumption Expenditures Price Index, which is the government's more well-known consumer price index, is the inflation indicator used in the Consumer Spending Report, and it is constantly monitored by the Federal Reserve. Additionally, although wages were slightly higher than anticipated, consumer spending growth last month was lower than anticipated. The most recent series of reports were the year's final significant U.S. economic updates. Investors' attention will soon shift to the upcoming wave of corporate earnings. Even though the rate of price increases has continued to slow, the Fed has stated that it will raise interest rates in order to control inflation. After starting the year at a historic low of practically zero, the Fed's benchmark overnight rate is now at its highest level in 15 years. The federal funds rate, which is the primary lending rate, is currently in the range of 4.25% to 4.5%, and Fed experts predict that it will increase to a range of 5% to 5.25% by the end of 2023. Since the Fed doesn't anticipate cutting rates until 2024, the higher rates have stoked worries that the economy could stagnate and enter a recession in 2023. High rates have had a significant impact on stock pricing as well as other investment costs. In currency exchange, the American dollar dropped from 132.82 Japanese yen late Friday to 132.53 yen. From $1.0614 to $1.0628, the euro increased.